It's also live streamed, and all of the reports will be posted on the AOA website. But I understand JFO will also post them for those who are interested. So with that, I'd like to convene the emergency board and call this meeting to order. Agenda item number 1 is the private activity bond allocations for calendar year 2021. One motion will be required, but I'd like to invite Scott Baker up first from the Treasurer's Office to present. Scott, welcome.
Well, thank you, Governor. Good afternoon. Each year, the IRS sets the amount of private activity bond cap that states can issue. For 2021, that amount for each state is $110 per person, with a minimum of $324,995,000, which is an increase of about 3.2 million from last year. In Vermont, the emergency board typically makes an initial allocation at the January meeting, and they generally make an allocation to the Vermont Economic Development Authority, or VEDA, the Vermont Municipal Bond Bank, and the remaining amount is generally allocated to contingency account, subject to reallocation later in the year, either at the July emergency board meeting, or they'll grant the governor the authority to reallocate any amount at the end of the calendar year. The board also permits the bond bank to assign any of its portion to any governmental unit that may need it outside of the bond bank's use. The other two issuing authorities, the VSAC, Vermont Student Assistance Corp, and Vermont Housing Finance Agency, VHFA, are the other two authorized issuers. However, they do not typically get an initial allocation in January. They are allowed to carry over any of the state's unused cap for up to 3 years. So any issues that they will be doing this year, they'll be using cap from previous years. That way the state loses as little as possible. So the Treasurer's Office has surveyed all of the agencies, the constituted and eligible issuing authorities in the state, and we are recommending an initial allocation of $20 million to the Vermont Municipal Bond Bank, and to permit the bond bank to assign any of its portion to any governmental unit that may need it, $40 million to the Vermont Economic Development Authority, and the remaining $264,995,000 to contingency. The proposed motion with these details is shown in item 1 in the board packet.
Great. Thank you, Scott. Any questions for Scott? Boy, off the hook, Scott, I guess.
Okay, thank you.
Do I have a motion?
I'll move this. I'll move adoption of item 1.
And I'll second it.
All right, the motion's been made and seconded. Is there any further discussion? Now, here's something that I haven't done before on Zoom. I don't know how you vote. So do you just put your hand up? How do you do this?
With different ways, because we're different chambers, but I think if we could just do a voice vote.
Okay, all right, we'll try that. All those in favor, signify by saying aye.
Aye.
Oh,
All those opposed? That one was easy. Ayes have it. And agenda item number 1 has passed. Thank you, Scott.
Thank you.
We'll now move on to agenda item number 2, the Medicaid caseload and expenditures estimate. And we'll have Nolan from JFO come in to present. Good afternoon, Nolan.
Good afternoon. For the record, Nolan Langwell, the Joint Fiscal Office. I've been having trouble with my Zoom mic all day, so please make some hand signals or something if I start cutting in and out. I will be very brief. So you have the motion in front of you. Medicaid enrollment saw a slight overall increase in enrollment, but it's tricky because it's hard to know how much of it was due to the temporary halt in redeterminations. As part of the COVID relief, they're put in effort, a maintenance of effort. In short, that means that we stop doing redeterminations. So it kind of stops the level of churn. So people come on, but people don't really come off. So we don't know how much of that increase in enrollment is because of lack of redetermination versus other factors. So they're shifting all around the different category Medicaid eligibility groups. So there's little ups and there's little downs. Also, from what we've heard from Agency of Human Services, that we're starting to see some shifts in the services that are in the different categories of services. I don't have that sheet in front of me, so I can't tell you which ones they are, but we're seeing some shifts in those types of services. Our 52 points of light are back in balance after kind of being a little bit below balance for a while. And the biggest shifts are the usual suspect, which are the drug rebates. And then in terms of the revenues, they're a bit higher than we initially anticipated back in July, when we were a lot more pessimistic. That said, they're still down from last year. And those are the healthcare revenues or the revenues that are traditionally tied to healthcare, not including the cigarette and tobacco. And I'll leave it there.
All right. Thank you, Nolan. Any questions? Hearing none. Do we have a motion? Senator Kitchell,
Yes, I'll move the Medicaid program estimated caseloads and estimated per member per month expenditures for fiscal year 21 and 2022 as presented be approved.
a second. Senator Cummings. Thank you.
Second the motion.
Any further discussion? Hearing none. All those in favor, signify by saying aye.
Aye.
All those opposed? The ayes have it, and you've adopted agenda item number 2. Thank you, Nolan. And now agenda item number 3, what we've all been waiting for, the Jeff and Tom show. I don't know who's going to go first.
I'll start it and we'll kick back and forth here.
Okay.
6 months ago, when we first looked at the impact of the pandemic on revenues, we had very little actual data. There was hard information from tax and elsewhere to measure what was happening. We could see the declines. We could see the job losses. We knew that there was federal money coming, but a lot of it hadn't landed yet. And we looked at all those impacts and made estimates going forward based on that. A lot of the tax data too was deferred with filing deadlines that were pushed back, deferred revenues, and that clouded the picture of what we could see as well. Since then, in the first 6 months of this fiscal year, we have seen a steady progression of above target performance in a number of key and very large tax sources. It has not been shallow. It is widespread, broad-based, and it affects many, many different taxes. So it's not the sort of thing that one event or some processing issue or some transfers or things like that can possibly explain the kinds of things that are going on. What we're seeing is the impact of a phenomenal amount of federal deficit spending to offset the pandemic. Levels of spending that have never in the history of this nation been put into effect. And Vermont has received, as we've noted before, from the information we have on state allocations, has received on a per capita basis among the highest federal transfer payments of any state. And that has impacted the economy in hundreds and hundreds of ways. And part of that is tax revenue gains that we've seen that are really extraordinary. And based on that, we've significantly upgraded the expectations for revenue in fiscal 21 and fiscal 22 and 23 as well. I think it's important to note that this is not ongoing revenue that we're going to get forever, but with the political realignment in Washington, I think it's likely that there will be more money coming, and there are risks up and down to this, but that in a nutshell is what's driving the revenue picture. Jeff, do you want to add a few things?
I would just augment it by saying that when we did the forecast in August, we knew about all the negatives, okay? We had seen a decline in the economy that was breathtaking, huge and fast, historically unprecedented because of the actions that needed to be taken to protect the public health. And so it was easy in August to know all the bad things that were going to happen without really knowing what the impact, because we didn't exactly know how the CARES Act was going to, first round of CARES Act funding was going to pan out, how it was going to affect the various sectors of the economy that were experiencing the difficulties. We now know that, I guess we're all Keynesians now, if we throw enough money at an economic downturn, we can offset the negative economic factors in aggregate. It's difficult to do that because this money has created a lot of winners and losers. And the dynamics of the pandemic, which thankfully seems to happen only about once every 100 years, has affected various parts of our economy differently and has allowed some parts of the economy to adapt their business models and actually address a lot of the negatives that would ordinarily come with the pandemic. And in some cases, some businesses have been able to actually flourish as a result of it. But it's also, for lack of a better term, hammered various parts of our economy. The ones that have the least flexibility to adapt to remotely work, or, you can't virtually ski very well and get the same experience, or patronize, local establishments. And so while we can look at the aggregate numbers and see how the federal money has manifested itself tangibly in tax revenues. And by the way, it's very complicated, and we're still not 100% sure which part of these revenue streams are going to remain taxable. I mean, we had quite a discussion about the taxability of deductions for the original PPP recipients and whether or not they would be or they wouldn't be. And then the IRS came out and actually issued guidance. And so then we scrambled to see if PPP recipients were large taxpayers and corporate taxpayers in Vermont, and also individual taxpayers, because it looks like it's about split 50-50 between the personal income tax and the corporate income tax. And so I have to admit, I pushed some refunds up for corporate and individual income taxes in an expectation that we might see some of that. But at the same time, when you consider what happened with asset prices and the stock market, and when we look at the types of things that normally result in a positive spring filing season, they're all there. And yet we are also going out in timing at a time when we don't have year-end personal income estimate information yet, which is usually a pretty good indicator of what's going to happen in April. So we're going a little early in terms of understanding how April is going to pan out. But I think, as Tom said, when we look at the possibility of CARES Act Part 3, if you look at former Fed Chairman Yellen's testimony in her confirmation hearing for Secretary of Treasury, I think it's a pretty good chance that within the next 60, 90 days, we might have another significant round of federal fiscal pandemic relief funding, which will add some upside risk, which will maybe help balance the fact that the economy, the pace of the recovery is kind of weakened in the last part of the year and into the beginning of this year. So there may be some near-term downside risk for some of the revenue streams that come directly from current economic activity for a while. But in the scheme of things, it looks like it'll be short-lived. And then if we get another CARES Act round of funding, which wasn't in this forecast because it's not current law, it probably provides some upside risk to our forecast. But again, it's not going to be sustainable. I don't expect the CARES Act 4. And so when this runs out, when you actually look at the year-to-year progression, when we get out beyond 2022, we actually have a little bit of a downstroke in 23 in the fiscal planning estimates that we provide, in part because that's the point in time when the economy is going to have to start actually fending for itself again.
Yeah, so as
I don't
Jeff,
know if you want to add anything to that.
yeah, so Jeff said, you know, the refunding is a potential big risk, and it's really hard to play out all the different possibilities with flows of money that are driving this. As Jeff said, the PTT money was not taxable, but a lot of what we're seeing are the effects and tax liabilities from the multiplier effect when money is introduced as it is. And again, this is money coming with no tax increase, no payment by the state of Vermont near term. There'll be federal obligations that the state will have to participate in, but it's pure stimulus. So the tax liabilities that we're seeing are often from secondary and tertiary expenditures from this stimulus money. And so, for example, with PTT, it's not taxable, but if you use it to buy something or pay an employee, then that becomes income that is taxable. The unemployment insurance, on the other hand, is taxable. And the largest withholding taxpayer of late is the Department of Labor. That's not normal. So again, they're withholding, but who's to say whether that's the right amount? Some people feel that there could be surprise liabilities that recipients of unemployment insurance have been getting come April. But
One exception, Tom, with one exception, if you don't mind me interjecting. Under the rules of the CARES Act, people who file for EITCs are able to use their 2019 income, because if they had to use 2020 and they had a lot of unemployment insurance income, they wouldn't be able to qualify for the EITC. So part of the refund risk associated with a personal income tax comes from the fact that lower income filing taxpayers can use 2019 income to qualify for an EITC.
there are so many wrinkles in the tax law that are special tax provisions that have been put in for corporations too, that trying to guess what in aggregate they're going to look like at the state level is extremely difficult. So I think it's really important to understand that this forecast is a little bit less uncertain than the last one, and that we have a bit more information, but there's a very high level of uncertainty around it. So we're going to be monitoring the two things that are driving the economy, the epidemiological course of the pandemic and these federal programs and federal responses, and trying to tease out how each of those are going to filter into economic impacts, which then turn into tax and revenue impacts.
If I'm around long enough, I expect in 23, 24, 25, we might even start talking about inflation pressures again.
I think that's likely that we're going to have more inflation further out, but there are a lot of longer term impacts that that the nation will have to contend with. I mean, the level of borrowing, is truly unprecedented. And just to put it in a frame of reference, the state has received in 2020 about 20% of its entire gross domestic product in federal stimulus payments. That's just a staggering impact. There's some regional models when we tried to play this out where it blows up the model because it never anticipates something like that happening. A lot is left to be written about this pandemic and all its effects, the economics of it, and the tax and revenue implications. But this is good news. It's moving a lot of the funds very close to pre-pandemic forecast levels, in some cases higher than pre-pandemic forecasts, in some cases like the transportation fund still a little bit lower. but it's a very favorable situation.
Yeah, actually, the ed fund turns out to be higher this year than we thought it was going to be a year ago, in a real tribute to the consumption effects, and also the huge increase in the personal savings rate that came along with the transfer payments that went to support household income. And that was, I mean, we're kind of let the data and the models govern the way we look at things. But I will admit that I spent the greater part of 36 to 48 hours trying to pick apart the fact that the numbers couldn't possibly be this good.
Well, the Wayfair decision was obviously something that was instrumental here in our recovery. Had we not had that and not taken action, we wouldn't be in the position we're in today, I don't believe.
Yeah, we're actually taxing the part of the consumption function that now is actually growing. Where for years we were not taxing the part of the consumption function that was growing.
Yeah, there's a chart on page 20 of my handout that shows e-commerce nationally as a share of total retail sales. And actually the numbers that we see in Vermont are a little bit higher even of that share. But you'd see on it how it just spikes up at the pandemic. And the timing on that, you know, it's so critical that that is a part of the sales tax base now. And, you know, it had not been until recently. And that extends also, and you see this in a lot of sectors, there are huge disparities between, you know, winners and losers across the board. And so, you know, even though there's parts of retail that have really been hit hard and are still suffering greatly, e-commerce obviously is not. Same with a sector like accommodations. So the meals and rooms tax is way down, and the rooms part of it and alcohol part of it are down more than the meals. But within the rooms part of it, short-term online rentals are doing extremely well. And again, that wasn't a part of the tax base not too long ago. And it's really important that we update the laws based on the changing economy so that the state is participating in what's happening in the economy in terms of revenues. And those are two really important examples of it.
I think the other thing that's worth noting is when we look at labor market of Vermont, you know, one of the things that we track is, and it's table 1 on my report on page 2, which shows the last labor market for the states, for the last monthly labor market observation is still November. And it shows that Vermont lost 68,200 jobs during the sharp and short downturn. And we've recovered a relatively solid 42.4 thousand jobs. The problem is we're still down 25.8 thousand jobs. We still have 19,500 fewer Vermonters employed at this time than we had at this time last year in January. And under ordinary circumstances, I'd be in here talking about a 5-alarm fire in the Vermont economy. But that's not the case with the pandemic assistance that we have. But I think it points to the work that still has to go. We still have to go to get all parts of the economy back on their feet. And when the economy has to take over to grow for itself and produce the tax revenues for itself without the deficit spending dollars raining down on the economy. And I think the numbers that Tom and I have talked about is, you know, by the time this one and this CARES Act 2 gets done, it might be $10 billion when the size of our economy is at $32.5 billion in nominal dollars. That is an unprecedented and mind-boggling number at this particular point in time. And so when the economy winds off this, a couple of fiscal years out, it's going to be really interesting to see how much of this tax revenue and these taxable revenue streams are going to be able to grow and be supported on their own just by the interactions of the economy without the CARES Act funding and the federal fiscal assistance and the pandemic funding.
Yeah, so just to underscore, the way the pandemic interacts with that Jeff's table that he just showed there, things have been going in the right direction since the big drop in April, May. And in December, however, at the national level, we don't have state level data yet, there was the employment actually declined from the prior month on a seasonally adjusted basis. So this new variant of the virus, which is more transmissible, it appears, was cited as being, one possible explanation for that is parts of the country were having to tighten up a little bit. And, a lot of times it's not government action that dictates that, it's individual behavior. So it doesn't matter if there's a formal lockdown or not. If people see and experience there being higher risk, a lot of people just cut back. But there was an actual employment decline in December. So at the national level, things got a little bit, there's a little bit of backsliding. And that's the first decline since the steep drop when the pandemic started.
I actually have a chart on that on page 11 of my report. And I also have a chart that mirrors things through November for Vermont. And clearly Vermont has mirrored the US. We had a very brisk start to the recovery, but as the new case levels increased and before we got news of the vaccines, obviously Vermont kind of mirrored the US track, although we didn't go negative in our most recent month, but that's only through November.
Yeah, and really you can see the relationship between the pandemic and economies in lots of different ways at a national level. You can see the nations that have done a really good job on the healthcare side, have not had to close down anything. They've actually experienced year-to-year growth, manufacturing and output and all the rest continue to grow. And other places have really struggled. Hats off, Governor, to you and the team of people in the administration who've managed the healthcare side of it, because there are real dividends that come from that. We look at the property transfer tax, where there's just an enormous amount of purchasing of especially residential real estate. It's 40% above expectations. And a lot of that is from people that are seeking a safer place to be. And the fact that Vermont has throughout this had consistently good health outcomes and statistics on that has been a big draw to that. I think there is also some lasting reputational benefit to that as well. The property transfer data is interesting. And I think also there may be population impacts from that. The data that the census released for their 2020 population estimate is based on the 2010 census and then is an estimated process for July. So I don't think that's an accurate representation of what may have happened in the way of population change in 2020. There are events like 9/11 where there was a very short little burst and then it dissipated. I'm not sure, how widespread or long lasting this may be, but it's a very real phenomenon. You see it in the real estate side of things where prices were already accelerating, but this is likely to push that even faster and may have real lasting benefits. We also see as one of the upsides on the revenue side, again, we have no data on this because people haven't filed yet, but people who are working remotely should owe Vermont tax. I know this is being contested by some of the states that would be losing revenue for remote workers, and Massachusetts and New Hampshire are tussling over it. But if people based on current law are paying taxes as we expect, we should be getting some additional personal income money in with the April filings. We have no way to measure right now because nobody's paying estimated taxes on that, how large that may be, but that could be significant.
I'm not going to hold my breath on that one.
Yeah.
And in terms of the population estimates, we are just about as far away from the last actual observation back in April of 2010 as you can possibly be on those estimates.
Yeah, there's always a big true up at the end of the 10-year period, and sometimes it's thousands of people. It can go any direction, but yeah, it'll be interesting to see what happens. Of course, that whole count has been delayed due to the pandemic, and the attempt to certify it early without good statistical basis has been turned back, it looks like. So at least we'll be getting credible numbers. One thing I did just want to share on the real estate front, on page 22 in the handout, there's a breakout of some tax data that is for calendar year 2000. Normally we look at fiscal years, but I wanted to get a 12-month period that was ending with the most recent data we had. So calendar 2020 versus calendar 2019, we had total growth in property transfer tax revenues of 32%. So that should be page 22, Sorsha, of that. Oh, maybe there it is. Okay, I'm sorry, 23, I guess. All right. Okay, sorry. So anyway, so 32% growth in revenue and in the value of the properties transacted, but the number of properties actually that were transacted actually declined a little bit. So that implies that a lot of these transactions were higher end properties. Much of this was in the residential sector. And you can see that there are places with large populations like Burlington, Bennington, St. Johnsbury, you would expect would have, you know, just higher levels of activity because there are more people there. But when you look at these very small towns that are, most of which are associated with ski areas or resort areas, you can see how much of that growth has taken place there. That cumulative percent of the total growth is on the side there. And you see, if you go down to 17 towns ending with Barnard, you get 50% of the growth in property transfer tax revenues just from those 17 towns. And if you scroll down to the 43, it's 75% of all the property transfer tax revenue growth. But many of those towns are small towns that have attracted investment from out of state.
Yeah, and outside the ski towns, you probably see that, Tom, to a certain degree being a function of severely constricted inventory, which is pushing prices up.
Yeah, prices have been rising anyway, and this will certainly accelerate that. The price data that we have is only through the third quarter of 2020, and so a lot of the price impacts won't be seen for a couple of quarters. But that will eventually also filter into grand lists and much slower delayed process into the biggest part of the education fund. But it's something to keep an eye on.
Do you have the number of transactions within each community?
I do, but I'm not sure I have that. I'll see if I can just pull that up.
It would be just interesting to see if there's, you know, in some of those communities, there's some high-end real estate there, obviously, and there may not be as many.
Yeah, right. So, yeah, let's just look like in Warren. So in Burlington, the number of transfers was 871. In Warren, it was 323. In Stowe, it was 708.
Wow.
Dover, 383. Hartford, 583. Woodstock, 245. So again, a smaller number of transactions, but a lot of money associated with it. But still, that's quite a few transactions for communities that, you know, whose populations are really small. Wilmington, 269. Stratton, 155. Yeah, so it's there's quite a bit of activity given the size of those communities.
It'll be interesting to see how many of those are going to be first our homes here in Vermont and families coming with them.
Yeah, it really is hard to know. There's so much anecdotal information about that, and we can see neighbors and people that have come up and occupied second homes, and then also people that have bought them, young families. And I know several that are, have relocated from big urban areas, bought properties, and are planning to work remotely indefinitely.
We're waiting with bated breath for the new school enrollment figures, Governor.
Right. That'll tell the story.
That'll be part of it, at least people with children.
Is that all, Tom and Jeff?
Yeah, we were only going to take 5 minutes, Governor.
Well, I'd like to respond to questions, but there was one other area, since it gets some separate attention, which is the healthcare side of things. And I was asked earlier by Senator Brock, what are some of the worst things that I saw in the data and numbers? And one of the worst things I saw was a big increase in revenues coming from cigarettes, tobacco products, and vaping, way above expectations. That's a revenue increase that's not particularly good news, about $8 million more in fiscal 21, but levels of vaping in the first 6 months that are about the same as 11 months of fiscal 20. We didn't have a full year then, but 11 months already collected in the first 6 months of this fiscal year.
Are those
So-
separated, vaping versus tobacco products?
Yeah, it's not separated in the Schedule 2 data that we see all the time, but when we get runs from tax, we parse that out every 6 months. But it's, as a new tax, we're following it, but way above the initial estimates and even the last set of estimates done. So I think that's about it from our end, unless there are questions. Jane, you looked like your hand.
Yeah, when you're talking about some of the revenue sources, are we seeing that same one in other areas like lottery? I know liquor proceeds were up when we did the budget. So are we seeing that same trend in those other areas of revenue sources?
So liquor no longer flows through to the available general fund like it did before. That's been really strong from all the personal consumption data we can see. Lottery is not up as much. And nationally, if you look at personal consumption expenditures, lottery is actually lower, which is a little bit of a head scratcher, but that's what was reported in the third quarter. We seen a little bit of a bump in lottery, but nothing like some of the other tax sources.
Thank you.
Any other questions?
Would you like a motion? on
Yeah,
that?
I'd like a motion if I could.
All right. So I'll move that we adopt the official revenue estimates for general fund, transportation fund, and education fund as set forth in the motion. I can repeat it, but I think everyone has it here.
Is there a second?
Second.
All right. Any further discussion? All those in favor, signify by saying aye.
Aye.
All those opposed? The ayes have it, and you have passed agenda item number 3. Thank you very much, Tom and Jeff.
Thank you.
We'll move on to agenda item number 4, the estimate of the impact of authorized TIF districts upon the education fund. I'd like to ask Jake and Graham to present. Maybe, I don't know, who wants to go first?
I guess. Okay. Thank you for having me. I'm Graham Campbell from the Joint Fiscal Office, and I'm here to present, as Jake and I have done in the past couple of years, the maximum impact on the education from the tax impact on the education from tax and increment financing districts. This is a consensus estimate between us, and we have come to the amount for fiscal year 22 of $6.5 million. That's up about $500,000 compared to last year. And that's it, unless Jake has anything else to add.
All right. Any questions? Could I have a motion from someone?
I'll move that we adopt the motion. Item 4.
Is there a second? Senator Cummings, did I hear yes? Yep. Any further discussion? All those in favor, signify by saying aye.
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 Those opposed, signify by saying no. The ayes have it, and you pass agenda item number 4. Thank you very much, Jake and Graham. We'll now move on to agenda item number 5, the request to reimburse the State Forest Parks Fund from the Insurance Reserve Fund. I'd like to ask Mike Snyder, our commissioner, to present.
Good afternoon, Governor. Greetings all. For the record, Michael Snyder, Commissioner of Forest Parks and Recreation. And yes, we are requesting a reimbursement in the amount of $583,155.20 for costs associated with 2 insurance claims. One for the Smuggler's Notch restroom fire from December 2013 and the Stone Hut fire on December 2015. Happy to explain or provide background as you may need, but that's the basic request.
Any questions for Commissioner Snyder? Hearing none. Is there a motion?
I'll move approval.
Thank you. A second?
Second.
I have a second. Thank you very much. Any further discussion?
Yeah, Commissioner, is that 20 cents really necessary?
I thought you might ask, Senator, so I wanted to have it down to the penny, thanks to our team.
All right, it's very impressive.
Any further discussion? All those in favor, signify by saying aye.
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 All those opposed? The ayes have it, and agenda item number 5 has been passed.
Thank you.
Thank you very much, Commissioner.
You bet.
We'll move on to agenda item number 6, the Education Fund Outlook. I'd like to invite Chloe Wexler from JFO to review.
This is Catherine Benham from Joint Fiscal. I am substituting in for Chloe. She was on the agenda, but I'm filling in for her. This is not an action item. I think this is just a more informational, and you all have the education fund sheets, I believe, in the packet. And the quick summary is, if you remember, and for the December 1 letter that was prepared, there was, given the prior revenue forecast, it looked like there was potentially a $58 million problem at the end of FY21. With this new revenue forecast, that problem has been erased, and there's now an $18.6 million surplus or revenues available at the end of FY21 for you all to move forward with in policymaking. This also means that the FY22 tax rates were in December projected to go up 9 cents. And now with the new additional revenues coming in, they're projected to go up 2.8 cents. And that includes filling the reserve to 5%, funding the increase in the teacher's pension for normal cost. This also assumes that the 18.6 is going to be a policy discussion for legislators and the administration to have, and to figure out what to do with that. So that money is still available with the 2.8 cents increase in tax rates. That's a pretty quick summary. I don't know if you have any questions or if there's anything else you'd like me to cover.
Any questions for Catherine? Looks like we better let Catherine get back to her skiing.
Thank you.
Okay, it looks as though we've completed everything. And there being no further business, I'd entertain a motion to adjourn.
So moved.
Second,
Second.
all those opposed. Let's take it there. All those in favor, signify by saying aye.
Yes.
Aye.
All those opposed. Great. The ayes have it, and we have finished our business. Thank you all very much
Thank
for
you.
participating. Look forward to working with you, and now the fun begins, right? It's all a lot of one-time money, and from my perspective, I think you can expect in the budget address that we'll be trying to make some investments in the right area to get us the most return, the best ROI. So stay tuned. We'll see that in another week.
Thank you.
Yeah, thank you.
Thank you.
Take care, everyone.